Capital Record, where we defend free enterprise and capital markets because we believe in the dignity of the human person. Hello, welcome to David Bonson's Capital Record, brought to you by National Review. It seems pointless right now for me to do an episode on anything other than tariffs and the trade war. I obviously gave a bit of a breakdown last week, the day after the Rose Garden and after the sort of big announcement that came from the president. And then about a month's worth of activity took place in the next 2 days. And then you look at 3 or 4 days later, and it really does seem like you've had a year's worth of activity in the just few days since I've last been with you here in the Capital Record. Even just in the last half hour, as I'm sitting here getting ready to record on a Wednesday, all of a sudden there was the announcement from the president that he was pausing for 90 days all of these tariffs that caused the world financial markets to go into free fall in the last week. And the exception being China, that he's not only not going to a pause with China, but is escalating up to a 125% tariff level with China. Now, why would markets rally massively in the news of a pause on other countries, but a big increase with China? Well, more or less for the same reason that this is exactly how the president should have approached it to begin with. That to the extent there is a policy objective that the president has to achieve better trade deals with China, to probably get to some currency arrangement with China, and address some of the other issues not related directly to tariff cost or currency, but even issues pertaining to order commitments on agriculture and energy products in the United States, to intellectual property theft, etc. The fact of the matter is that by lumping it all in together, as they did a week ago, the president weakened his hand with China and now has to decouple because the economic pain being done to America by his actions left him with a weaker hand in negotiating with China. So the folly that I was criticizing in our last episode was really exposed by financial markets to be even more folly ridden than we had first anticipated. Massive increases in tariffs on ally countries that don't even tariff us. Massive increases in tariffs with countries that have very low tariffs and were open to negotiating better arrangements. So the reciprocity myth fell apart, and it fell apart because of the president's decision to do it on the basis of trade deficits. And this economic point now becomes a very moral point. It becomes a mathematical point. It becomes necessary foundationally to understanding a lot of the other moving parts to this. If you believe that it is fundamentally immoral that one country sells you more things than they buy from you, then you're going to get a whole lot of other things wrong. And that was a moral claim. The president did not say that our tax rates or GDP is affected. He said we're getting ripped off. We're getting stolen from. On Monday, he said the European Union is stealing $1.9 trillion from us. And he never explained what it is that they're stealing other than the money, as if they're not giving us the goods that they're buying, that we're buying from them. And so this entire economic craziness that has largely been promoted in this administration by Pete Navarro and Commerce Secretary Lutnick, that trade deficits are the major issue. This is where first principles become so unbelievably important in economics. You're going to get everything else wrong when you get that first principle wrong. And the first principle is out of free exchange, that there are two willing parties participating. And when one party wants dollars more than they want goods from the other, and the other party wants goods more than dollars, there's nothing immoral that took place. And that's what the vast majority of trade is. And by the way, how do I know that that's true? because it's exactly what we do when it comes to services. We sell the world more services than they sell us, but we don't say that we're ripping them off. We're getting more currency than we are getting exchange of services. So the way in which we talk about these things matters. And I think that the president's view that countries are ripping us off by selling us more things has been exacerbated in this administration, where previously there were voices that I think helped, from the Larry Kudlows, Steve Moores, Steve Mnuchin's, Gary Cohn's of the first administration, that have not always been there in this administration or have been crowded out by some of the others. There was very bad advice he got. And if it sounds like I'm going to pick on Lutnick and Navarro a little bit, it's because I am. This doesn't alleviate President Trump's culpability. He's in charge. He's the commander in chief. This is his deal. He'd be the first to say that. But he ultimately was told that there'd be a little bit of stock market volatility, but you can just go threaten absolutely unprecedented hundreds of billions of dollars of immediate cost to global trade and everything will be fine. And financial markets more or less shut down. And I still believe we're very likely going to end up going into a recession because of it. Even if he has completely blinked now, even if he's completely capitulated, you more or less hit a strike price too late. It may save equity markets. Long-term equity prices are irrelevant here. The dumbest thing I've had to deal with in the last few days is people saying, well, you only care about this because you're a wealth manager and you're invested in public stock markets. People don't have any idea how much I benefit from declining public stock prices. We're long-term buyers. Being able to buy great companies that we want to own that are reinvesting growing dividends over time at lower prices is exactly what we want to do. It is fundamentally absurd that that would be our objective. But it's the reason that accusation comes at people like me is because of this class warfare accusation that it's Wall Street versus Main Street. And it's one of the huge things this podcast exists to push back on. So I started a piece at Bahnsen.com where I'm chronicling conversations I'm having with real life businesses all over the country, with showing how many employees they have, what their revenues are, what type of business they are, where they are, and what exactly this tariff issue has been doing to them. And it has been utterly destructive to small businesses, to family businesses, to American manufacturing businesses over and over again. This is not about defending the needs of Tim Cook and Apple. It's not about defending the needs of Bill Ackman and hedge funds. It's not about defending the needs of David Bahnsen and his private wealth firm. This is about workers and the businesses that employ them. And ultimately, these were destructive policies, and we still have a lot of wood to chop here. I don't happen to believe that there's any sense in which a 125% tariff on Chinese goods can last. I don't happen to believe that an 84% tariff that China is now retaliating with on our exports to them can last. This is a way of shutting down trade between the two countries and forcing the two countries to go kiss and make up. And you are going to have to now see play out exactly what I've been saying for months and months, that they have been selling you two things that cannot be sold at the same time. One, that we're going to bring all these jobs back to America, and two, that we're going to get rich off of tariffs. You're unable to do both at once. That is a tautology. That now gets exposed. Which way we break, I don't happen to believe those jobs are coming back regardless, but just bottom line, is the end run here going to be an announcement of better trade deals, an announcement of a currency deal, or is it going to be that we literally just stop buying things from China? I'll let you guess how you think that's going to go, based in the light of what we've seen in the last 5 days. So I think first principles matter, and I think identifying the folly for what it is of saying that trade deficits are themselves immoral. What is immoral is fraud. What is immoral is waste. And what is immoral, my friends, is central planning of an economy where you believe a particular person or agency can better steward the affairs of trade terms, of decision making within one's business and sector more than the actual skin in the game actors of the business itself. What we need is freer markets, and I most certainly love the idea of freer markets existing with more virtuous actors, more virtuous countries, and more virtuous policymakers. Thank you, as always, for listening to David Bahnsen's Capital Record.